On Business Incorporated today. China to forgive 23 interest-free loans to 17 African countries. In Ghana, 7 other countries set to begin actual trading under the African Continental Free Trade Agreement. South Africa's unemployment rate drops to 39.9% in the second quarter of this year. Good afternoon. Welcome to Business Incorporated, coming to you live here on Channels Television. I'm Ini John Mekwa. We begin the program with our usual market numbers, starting from Africa. And there we see in Nigeria, it's a mixed sentiment as intraday. Nigeria, which closed in the negative, has sustained that bearish sentiment, down 0.32%. There we see deeply in the red and getting really far away from that 50,000 that used to be a pride. We see at 49,188.41 points. South Africa, on the other hand, is very much in the green, almost 1% up at intraday at 69,878.80, very close to 70,000. That is what we see there. And in North Africa, it's positive for Egypt, 10,262.76 points, and that's up 0.21% at intraday. While Kenya, I don't know what's happening to Kenya. We know that during the elections, even when the result was announced, we did see that the market was doing really good, but now we see it's down almost 1%. Perhaps it's the petition against the results that's bringing that. And then moving away from Africa, we move to the Middle East now. In the Middle East, we see that it's mostly negative for major markets that we follow. In the United Arab Emirates, Dubai was down 0.06%, while Abu Dhabi index was the lone gainer. It was up 0.05%. Saudi Arabia and Qatar were losing at intraday, 0.09% and 1.50%. Now let's see what's going on in Europe. One of Germany's best-known brands around the world, sports apparel maker Adidas, is giving its CEO the boots. Well, Kasper will have to leave next year, well before his contract is to be terminated, which is supposed to be in 2026. Chris Koba now joins us from Berlin to give us the details of this. Chris, good afternoon. Why is Adidas sacking its boss? What's going on?
Well, Kaspar Rostedt will leave the company next year in mutual agreement with the board, as both sides are putting it. He will stay on and facilitate the transition once a new CEO is found. As for the reasons leading to the separation, Rostedt says that, quote, external factors had negatively affected business in recent years, namely the fallout of the coronavirus pandemic and Russia's war in Ukraine, and that surmounting them had cost a lot of effort. We have to understand that it is quite a successful partnership that's ending here. Ever since he took over in 2016, Kaspar Rostedt has really brought Adidas up to speed. Sure, the company had been a big global brand and a rival to Nike from the United States before, but Rostedt managed to push the sportswear maker further. The chairman of the board of Adidas praising him for increasing the company's online turnover fivefold and boosting the company's sustainability credentials. Also, he successfully managed to sell Adidas' longtime underperforming brand Reebok, among others. But in the end, it looks like as if Adidas' troubles in China were simply too big for Rostedt to stay with the company any longer.
Yeah, we're very much interested in that, happening with the Chinese market. What really is the details of that?
Then Kaspar Rostedt refers to external factors for his departure that mainly points to the coronavirus pandemic and China's approach towards it and the fallout for businesses. Now, Beijing keeps pursuing a zero-COVID strategy, which includes large-scale lockdowns. And China in the past has been a highly profitable market for Adidas, one where the company has been present with a large number of stores rather than through a reliable online presence, something that critics say Rosted missed pushing for, and something that came back to hurt business when people are stuck at home and cannot go out to shop. During the second quarter, revenue in China dropped by around 35%, and Adidas had to lower its revenue and profit expectations for the entire year. And the pandemic isn't the only problem Adidas has been facing in China. In late 2021, Adidas, among other Western companies, was hit by a consumer boycott after the company raised concerns about forced labor allegations in China's Xinjiang region. Now, consequently, Adidas revenue took a big hit. Also, the overall public sentiment gave rise to domestic sports apparel makers, which didn't take issue with using cotton from the Xinjiang region, and which received additional publicity through the Winter Olympics earlier this year. So it is a multi-layered issue for Adidas in China, one that's ultimately become too much for its CEO.
Yeah, well, multi-layered. But how's the shares reacting?
Adidas share price dropped around 5% when the news broke yesterday in the afternoon, and the shares are rebounding some of these losses today. It seems as if investors feel that Kasper Rorsted didn't have too much of a bad rap, but there is, of course, the open question of who will come after him. The search for a successor has begun, Adidas said in a statement, and whoever the person will be, they'll have to push digital development further, get Adidas China business going again, and even if the odds by the Communist Party may be stacked against success there, and ultimately get Adidas share price up again, which in the course of around 12 months has been almost cut in half. Now, overall, investors, again, treading lightly today in light of fresh economic data out later today. Germany's blue chips index DAX up 0.2% in the early parts of today's trading session.
Yeah, well, Chris, looks like a whole lot of the list is long for the next CEO of Adidas. They have a lot of work to do, especially with the Chinese markets. So let's move from Europe now and see what's going on with the markets in Asia. We see that Asia-Pacific markets traded lower today after major indexes on Wall Street finished their worst day since June amid mounting rate high concerns. Since yesterday, this has been top on the list. There you have the numbers. The Hang Seng is down almost 1%, 0.78%. Shanghai is also down, but this is marginal, 0.05%. Nikkei is down more than 1%, 1.15% at 28,452. The Kospi is down. The Asian market is deeply in the red today. Elsewhere, Japan's Nikkei 225 is down, also more than 1%, while South Korea's Kospi also down more than 1%. A red market we have in Asia there. Concerns about interest rate hike is still very much in the front. But and going from there to the United States, stock features each higher today as the market tried to recover from its worst day since June. The Dow Jones was trading lower, and then 0.41. The S&P was up 0.14, and then we see the Nasdaq was also up 0.14, and these are the features for the U.S. market. Well, overnight on Wall Street is coming off a downbeat session as the summer rally continued to fade amid mounting rate high concerns in the United States. Going to the oil space now, oil prices rose by $1 on Tuesday as tight supply moved back into focus as a result of Saudi Arabia floating the idea of OPEC Plus output cuts to support prices and the prospect of a drop in the U.S. crude inventories. Global benchmark Brent crude gained $1.46 to $97.91 a barrel. U.S. West Texas Intermediate crude added $1.66 to $92 $2.02. Oil has soared in this year, coming close in March to an all-time high of $147, and that's after Russia's invasion of Ukraine exacerbated supply concerns. And there's also concern about global recession following that, rising inflation, weaker demand, as all of this have weighed on the price of oil. In the metal space now, gold prices rose and as the dollar and treasury yields pulled back slightly after the U.S. Federal Reserve minutes hinted future rate hikes. Spot gold was up 0.3% at $1,765.89 an ounce after falling to a two-week low of $1,753.97 in the previous session. U.S. gold futures gained 0.2% to $1,780 per ounce. The dollar slipped for the first time in about a couple of weeks now, 0.1% against its rivals, making gold less expensive for buyers holding other currencies. In the commodities market, Grain Traders Union have cut Ukraine's 2022 combined grain and oilseeds crop forecast to 64.5 million tons from the previous outlook of 69.4 million. And that's because of smaller than expected harvested area caused by the Russian invasion. The union said that Ukraine could export 32.8 million tons of its key agricultural commodities in 2022-2023 season, and that's including 10 million tons of wheat. The government has said that Ukraine could harvest at least 50 million tons of grain this year, compared with a record 86 million tons in 2021 because of the loss of land to Russian forces and lower grain yields. Meanwhile, raw sugar futures on ice fell on Monday as recent weakness in fuel prices in Brazil raised the prospect that mills in the world's top sugar producer will increasingly use cane to produce the sweetener rather than biofuel, ethanol. October raw sugar was down 1.3% to $17.86 and then the front month dipped to a two-week low of $17.61 on Friday. We'll still talk about commodities now. Data from the Crop Research Institute of the Council for Scientific and Industrial Research shows that Ghana had fall armyworm, that's FAW, induced yield loss in maize of 27%. That translates into economic loss of about $177 million. In response to the CSR, CRI has released a laboratory-read biological agent to effectively manage the fall armyworm investigation on maize fields. A research scientist has indicated that the accidental introduction of the fall armyworm in 2016 overwhelmed Ghana and the rest of Africa, and there was a need for an immediate solution. The FAW, which was accidentally introduced in Ghana in 2016, posed a threat to sustainable maize production and food security and data. Well, still in Ghana, now Ghana and 7 other countries, including Kenya, Egypt, and Cameroon, have agreed to begin actual trading among themselves under the African Continental Free Trade Agreement, that's AFTA. This will be the first since the agreement was signed about 2 years ago. Speaking at the Export Trading Company Seminar by the Africa Export and Import Bank, Deputy Minister of Trade and Industry Herbert Krapa said this will be a historic move for the continent and expects other member nations to emulate it. So far, 54 African countries have signed the AFCFTA agreement. 46 have submitted their tariff offers, including Customs Union. Also, 29 tariff offers have technically been verified for trading. 87.7% of tariff lines have been agreed upon under the rules of origin negotiations and phase 2 negotiations on investment, intellectual property rights, competition policy, women and youth in trade, and digital trade are ongoing. Let's take a break now. When we come back here on Business Incorporated, we have more African stories for you. And then we'll also stop by at our commodities segments. Do stay with us. This is Business Incorporated on Channels Television. You're welcome back. You're still watching Business Incorporated here on Channels Television. We start from, well, not Ivory Coast, Africa, but Ivory Coast is the world's largest producer of cocoa and is expected to face problems due to reduced supply and higher price of fertilizer from Russia. Once again, we'll talk about Russia's invasion into Ukraine. Its cocoa output is expected to fall to about 1.95 million metric tons in 2022-2023 season. In addition, there are dry weather conditions affecting the mid-crop and main harvest. Nigeria is also a cocoa producer. We kind of forget that, even though we're not doing our optimum production. So what does this all mean for Nigeria and other African countries? We have Mayowa Oluwatomi, research intern with economic think tank from Financial Derivatives Company, joining us here in the studio.
Thank
Hi,
you for having me.
Oluwatomi, good afternoon. Thank you so much for joining us.
Thank you for having me.
Yeah, so it's not just Ivory Coast's problem. What impacts do we expect this to have on the continent? And when we see countries like Nigeria, which ranks number 5, producing 270, so already we are not.
Yeah,
we're not producing at our optimum.
Yes.
Now
definitely.
we have the fertilizer issue going on, especially as the war is still ongoing.
Yes.
So what do we expect?
Actually, talking about the fertilizer, it increased by, I think, 30%, or nearly 30% this year, after, surging by over 75% last year. I know major what has been driving the price of fertilizer has been the high cost of inputs used in producing this fertilizer.
Because a lot of them are produced in Russia or Ukraine.
Yeah, so, and also considering the sanctions that were placed on the Russian economy, that has actually limited their export of major commodities, inclusive of fertilizer. And so these things have been contributing to the high price of fertilizer. Like you said, Nigeria is not also excluded from this impact, because considering the fact that most of the farmers that we have in Nigeria, the cocoa farmers in Nigeria, are small-scale holders. And so most of them are not able to, bear with this high cost of inputs, of which we have fertilizers too. So because of this, it will not, Nigeria will not be able to cover up for the shortfall from Ivory Coast. So generally, production will remain low. There are other factors that are actually lowering production in Nigeria, and that's what we have.
You see, weather is also
a major factor.
Not just in Nigeria.
Yes, in Ivory Coast, in Ghana. Remember, Ghana is also the second, and we rank. We are the 5th, yes, in terms of cocoa production. And so we have aging trees, cocoa trees, lack of mechanized farm tools. Those are the things that are actually hobbling cocoa production in Nigeria. So it will be hard for us to cover up for the shortfall from Ivory Coast.
Yeah, but we also see that outlook shows that demand is also tapered, it also reduces.
Yes.
What's driving that? Is it squeeze on liquidity or what?
Yeah, the impact from the Russia-Ukraine war has actually, spurred inflationary pressures in the global economy. And, this has actually shrinked consumers' income. And as a result of that, it's, coming from pandemic in 2020, in 2021, most businesses were still used to working from home. So demand has actually tapered right from the pandemic year also, although it increased slightly in 2021. But, 2022 should have been a better year for the demand for.
Like maybe full recovery from the pandemic.
Yes, but now we are having the Russian economy,
Russia
war
invasion into Ukraine.
And so that has actually, supported the slowdown in demand for this commodity, considering that fact. And so because of that, it will be hard for, we still expect Nigeria will not be able to move on to fill up this demand. They will not be able to consider the fact that we are still low in production, and that demand, as a result of that, our export earnings will actually, it's possible for export earnings to decline. And so all those factors will actually come into play.
Yeah, and you mentioned the issue of old trees, seedlings. We've had some conversation in recent times.
Yes.
On cocoa, we see that the price is increasing globally because, of course, supply has been tapered because of all of this. Is there any way things can change in Nigeria? Can we, because we do have the potential, we have the arable land,
Yes.
we have the weather.
Yeah.
All we have to do is work on it, maybe get the mechanized farming you're talking about. And
I
then
wish it was that easy.
I wish too, right?
So looking at the fact that in Nigeria, it's the problem, one of the issues we have is implementing these policies in terms of, talking from the side of the government. And also, I think another major issue in cocoa production is lack of finance. Most people the private sector have been discouraged, in investing in the cocoa business because, they are not seeing, and also the demographic of farmers in Nigeria for cocoa, for example, most of them are old farmers, and the youths are not willing to actually go to the farmland. Why? Number one, insecurity. Number two, we have, low income from, farming businesses. So that's quite discouraging.
I bet if we had a large size of mechanized farming, we'll have more youths, attracted to that space. And then we had a ready market that would just off-take it from the farmers. And then you had the processing, the value chain, and all of that.
So most investors have not seen strong, they've not been incentivized to actually invest in the cocoa in the industry. So that's why most of them are running away. They rather invest in something big, and they are sure that they will get yield.
And something quick.
So, thank you. Very, very quick.
Because as you noted, I mean, it's not just there. You don't see the prospect, you don't see the market.
So you don't just want to put your head into it. You don't want to invest a lot into that, and at the end of the day, lose, quite a lot. So that's what we've been saying in the cocoa industry. So in terms of, I believe the government should, implement policies that will actually aid investment in the cocoa industry. And when that is being done, when they see the green lights, they will actually come into that place. So they just need that green light, actually, and you'll see investment in.
Well, I tell you, if you talk about ginger, you talk about cocoa, you talk about granules, you have a lot of areas that we need attention. But thank you so much.
Thank you.
Oluwatomi Mayowa, analyst with financial derivatives. Thank you for your perspective this afternoon. All right, let's just try and get some stories in there. China has stated that it will forgive 23 interest-free loans to 17 African countries and will also provide food assistance to the struggling nation. Since 2000, Beijing has announced multiple rounds of debt forgiveness of interest-free loans to African countries, cancelling at least 3.4 billion of debt through 2019. And this was disclosed by the Chinese foreign minister and announcing the cancellation. However, the vast majority of China's recent lending in Africa, such as concessionary loans and commercial loans, have never been considered for cancellation. And I tell you, they have come under criticism for its lending practices to poorer countries. And a lot of people are asking what's going on undertone of this. And then from there, we go to South Africa, where the unemployment rate for the second quarter of 2022 fell to 33.9% from the previous 34.5% in the first quarter, according to the Statistics South Africa. Data from them indicates that 648,000 jobs were gained between the first and quarter of 2022. The biggest job gains were recorded in community and social services, trade, finance, and construction. The number of unemployed persons increased by 132,000 to 8 million in the second quarter. Meanwhile, youth aged between 15 to 24 years and those aged between 25 to 34 recorded the highest unemployment rates of 61. And finally, still in South Africa, the tourism income is on a steady road to recovery, with figures published by Statistics South Africa showing income from tourist accommodation industry grew by 67% year-on-year in June. The uptick was as a result of a 43.1% increase in the number of stay on the night sold and 16.7% increase in the average income per stay unit night sold. And that's according to the results of the latest UNWTO World Tourism Barometer. International tourism saw a strong rebound in the first 5 months of 2022. Talking about being on the road to recovery in spite of the war going on in Ukraine. We say congratulations to them, and we hope it is sustained. Well, that's where we draw the curtains on Business Incorporated for today. Thank you so much for being a part of it. We'll have another one tomorrow. But for now, enjoy the rest of your day. I'm Ini John Mekwa.